What's going on, guys? My name is Arjun and welcome back to my channel. March Madness is finally here. But no, not the March Madness that you're thinking of. But actually, what I'm talking about is what Blackrock, the largest asset manager in the world, referred to as the March Madness for the markets. BlackRock was talking about the FOMC meeting that's happening this week. BlackRock and many other large investors believe that this meeting could have a significant impact on the markets and move them significantly. So this kind of a meeting happens 8 times a year. But let's talk about why this meeting in particular is important and what makes it so special. First, let me tell you about what the FOMC, or Federal Open Markets Committee, meeting is. So as I mentioned, this meeting happens 8 times a year. And in this meeting, they set the central bank's monetary policy going forward. The monetary policy is the actions taken by the central bank to influence the availability and cost of money and credit to help promote the economic goals of the country. Basically, they talk about where they see the economy, where they see it going, and what actions they have to take to help to achieve the goals that they want. And they use 3 main tools to achieve these goals. The first is adjustments to the federal funds rate using open market operations. Basically, the federal funds rate is the rate at which depository institutions like commercial banks lend money to other depository institutions overnight. So basically, this is the interest that one bank charges another to lend money. The open market operations is the buying and selling of assets that the Federal Reserve does to maintain this interest rate within their target range. A change in the federal funds rate can trigger a change in the long-term and short-term interest rates as well. This is one of the reasons why it's so important to the stock market, because as we talked about in my previous video, which I'll link right here, the interest rates are key to determining the value of a stock and the stock market. The second tool that the Fed uses for monetary policy is adjusting the discount rate. This is the rate at which institutions can borrow money from the Fed. And the final tool that they have at their disposal is the reserve rate. This is the amount of money that depository institutions, like banks, have to keep in reserve. This is not money that they can use to lend out to businesses. So why does this meeting matter so much? The goal of the FOMC is to maintain the balance between economic growth and inflation. And what has investors worried is the rising inflation that's coming from economic growth. In fact, Bank of America did a survey of some of the largest money managers in the world, and they found that their worry has shifted from COVID to inflation and the Fed. The main worry here is that to combat inflation, the Fed may have to raise interest rates, which, as I mentioned earlier, can have a negative effect on the stock market. So what people will be looking for tomorrow from Chairman Powell when he makes his remarks at 2 p.m. will focus mainly on whether or not the Fed will have to raise interest rates and change their accommodative monetary policy because of the inflation that's coming in the economy. So now, the question is, what should you do? First and foremost, do not panic, be patient. It's very possible that the stock market will drop in response to whatever Chairman Powell says. The most important thing here is do not panic and let your emotions get the best of you. If you are worried about what could happen, it's best to take some profits before the comments from Chairman Powell at around 2 p.m. on Wednesday. This will give you cash in the event that the stock market does drop, and you'll be able to buy the stocks that you like on sale. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, and subscribe to my channel, and let's head on over to the next video.